Alright guys, welcome back to the channel. First of all, thanks to everyone who was sending their congrats about the Bitcoin and Ether trade that I was in. I will do another video on an update on that as and when. But yeah, we withdrew at 29,120, 120 over what I meant to withdraw it at because of Coinbase. So Coinbase have this two-step authentication, and I use an authenticator app. I've got a new device. I didn't realize I tried to log into my Coinbase account and needed that two-step authentication, and because it wasn't allowing me because of an error with the app, I wasn't able to get into Coinbase for about 72 hours after I applied for the key thing via SMS. And the lesson there is, if you're still in that, just make sure that you're aware of that, because I wasn't, and it was new to me. It was something that I didn't anticipate, and it ended up going in my favor, luckily. But we got multiple six figures out of that trade, which is great stuff. I'm going to be doing a video on how I reallocate all that to my investment account and how I rebalance my investment account, so watch out for that. This video is really about a couple of opportunities on the radar today in today's live session, and one that I took and one that I didn't take, and I want to show you the differences between the two and what a difference that can make towards putting you on a high probability trade or a lower probability trade, and really just the approach and the analysis of enabling me to get into a situation in an area of the market that I wouldn't normally get into. So it's a case of being a little bit patient and waiting for some extra indicators, some extra clues, and some extra setups in order to get involved. So we're going to start on the Aussie dollar, and it's both setups are very, very similar. So the Aussie dollar, we are bullish. Okay, we're pushing up. We've got the moving averages on the daily here fanning out, indicating that the trend is building some momentum. But where we're pushing up to, so I wouldn't be looking for a short just from an overall higher time frame analysis, but where we're pushing up to, if we just look left here, it's not the best level of structure. If I just bring on a horizontal line and just show you where we're trading, for instance, it's not the best level. There are some levels that have been tested in the past, yes, but looking left, it's a little bit higher. Okay, it's 7,800 would be the level that I'd look for potentially as a higher probability counter move. But we do have some inside structure here. We do have some levels of structure, respect at that level. So as we've pushed up to that zone, what I wouldn't do normally is be looking for just a double top entry or a counter-based move. What I'd be looking for is a bit more confirmation, so a reversal, rotation pattern, or even a confirmed reversal. Now, as we drop down to my first trading time frame, which is the 4 hour in this case, we can see that we did have a really nice double top. We had a double top. We didn't push down to the previous structure zone. We put in a nice time and price symmetry double top. We put in equal tests of the highs with price action. And if we look at the RSI down here, you're going to see that we went way up to 87, and then, which, 70 is considered the overbought condition. We went up to 87, and then as we put in that second test, we went down, the RSI dropped down to about 65, which gave us that nice error of divergence, about 20 points of RSI in divergence. So with that divergence in the equal highs, that's a real nice opportunity for you guys that do counter trend trade and looking for double retests and double tops and things like that. But as I said, based on the higher time frame, if we was at the top of resistance, that might have been an option for me, depending on what level we're at. 7,800 level's a nice level for me in this market. But we wasn't. We was at a level of structure that I wouldn't look at taking as a double top. So what I can do is look for extra confirmation. So once that double top's formed, which you can see here, now I can start looking for what we call a 2618, which I've been over in other videos before. And essentially what it is, it's a weakening, it's a double top, a retest, a failure to put in a new high, then some signs of weakening or some sell orders kicking in. And we want to drop below and break below the retracement here of the double top and then, which we done, and then a final push back up into that zone. Now, the 618 in the 2618 stands for 618 retracement, which is a golden mean. It's the golden ratio, Fibonacci ratio, which many people use, not just in trading, but in science, in nature, in everything. And it's a well-respected level in many markets. Now, it doesn't have to be the 618. You're really looking at a zone. You could use the kiss of death entry, which tests the highs again, but doesn't break and close above. You could use a 786. You could just look at a 1-to-1 reward to risk. As soon as you get that 1-to-1 reward to risk, you can look to enter. And that's what we did this morning. So we had a perfect double top here. And the great thing about this double top is we didn't have any high tests, high spikes, which means that your stop loss is going to be in an awkward situation, awkward place, and it's going to skew your reward to risk. Because in these 2618 trades, we're really only looking for a retest of the dip for targets. We're not looking for a full, it's not a reversal, it's just a slight rotation pattern. So we're not looking for extended targets, we just want targets at the low. So in order for us to get that, we need our stops to be in a place that's reasonable, that's going to allow us to have more than a 1-to-1 reward to risk and, a high probability move. So that's what we did. We're looking at an ATR based stop. We look at the highest high. We put an ATR based a stop loss placed 1 ATR above the highest high at the time of placing the trade. Some of you guys adjust that with price, some of you don't. And then we're looking to enter at the 618. In this instance, we got in a much higher. So if we just bring on the retracement tool here and go from high to low, you're going to see we actually got in almost at the 786, between the 618 and the 786. So that put us up a little bit higher if you're using Fibonacci ratios. But really, it was in a nice zone that gave me a nice reward to risk profile with an ATR based stop. So this was the risk. The old throat is going. I haven't been talking much. Well, I spoke a lot before Christmas in my workshop, and I haven't run a live trading room all over Christmas until today. So you guys know I've got a bad throat. It's just like I can't talk for very long without it going husky. But you can see I've got more than a 1-to-1 reward to risk here. Targets are just above. We just look at this doji on the 4 hour, just a couple of pips above that doji body is where the targets are going, and we're in the trade. So hopefully this can roll over. So that's a nice opportunity, a nice example of where you might be looking for a bullish trend, and you might have certain rules that allow you to counter, but not. If you're trying to take trend continuation and counter trend, you're going to come unstuck. It's very hard to maintain consistent profits because on the way up, you're looking for the pullback, but you're never going to catch the pullback. You're looking at getting involved, around the pullback or even on the way up. And then as that move plays out, if you're looking to counter, you're then looking kind of halfway up that move to the pullback. And you're kind of in the middle of this zone where you're constantly looking for opportunities, and it's really, really difficult to maintain consistent profits doing that. So you're either one or the other. And what I am is I'm a trend continuation trader, but then there's certain levels of the market that if a high probability rotation setup is met, then I can take that. So that way I've got a well-rounded toolbox. And then in consolidation, I can take consolidation patterns as well. So that's what we're looking at on the Aussie dollar. That's what we took. We took it on this TradingView account just for demonstration as well. And then what I want to show you is the New Zealand dollar. So New Zealand dollar, you might think that that's an identical situation. The New Zealand dollar at the moment is kind of a hybrid between the Aussie dollar and the Euro dollar. Euro dollar in the way that it's approaching this major level of structure consolidation looking left. If I just bring on this horizontal line, you'll see that this is a very similar market set up to the Euro dollar, but we're approaching the bottom level of that, which we can confidently say that that's a nice level of potential resistance. So we can start looking at the same situation. Now the difference with this one, I don't know if you guys see it already, but there is definitive rules to what makes a retest or a double top. And the first rule is that the second test must test the highest high of the first test. and this one doesn't. So if we just move this horizontal line up here to the first highest high test, which of course is this wick right here, you're going to see that this second test doesn't test it, right? We've got the divergence there, so it all looks the same, but the top isn't as nice as the Aussie dollar as well, because it pushes down a little bit deeper into previous resistance, becomes support, whereas the Aussie dollar is just that tight little V shape. But we don't, the most important thing here is we don't retest the highest high of the first test. So therefore it's not a valid double top. Now, the most important thing in trading is to have an if-then syntax, a process of making your setups and your approach objective, because you can't be half pregnant, right? It's yes or no. And it can't say, oh, it looks like a double top, or it's close enough, because there'll come a point where you start to dilute that close enough and then you're just taking anything. So it has to be very, very objective, and it has to be very binary, yes or no. Is it a double top or isn't it a double top? And this one isn't, because of that reason, because of those rules aren't met, that criteria isn't met. So even though we then rolled over and got the breakdown and we pulled back up and it looks very, very much like the Aussie dollar, it's not the same. And that is the biggest differentiator between a high probability setup and a low probability setup. And I want to just post this out today whilst we've just taken the trade, so you guys can follow along, and it's not one of those hindsight trades where they go, oh, I only showed you the ones that I won. I want you to see this just like I did with a Bitcoin prediction video back in 2018. I like to put out trades that based on my approach, my analysis, my expertise, and how I trade myself. So follow this along. I hope you found it valuable. Let me know in the comments what you're looking at, if you're looking at this setup, or how you trade these types of setups, how you trade reversals. Let me know. And if there's anything else you want to see on this channel, let me know in the comments as well. Thank you for watching the video, and stay tuned for many more of these. I'm going to be releasing one every single Tuesday, and also my always free show, live show, is going to be released this month as well. So until then, take care, have a great rest of your day, and I'll see you then.